just kind of been a back and forth year with, strong returns out the gate with a concentration in a handful of stocks. One of the facts that we talked about before here in the office is, look at Apple and Microsoft. They represent roughly 15% of the S&P 500. That's 500 of the largest companies, and two stocks make up 15%. And that's the largest percentage concentration for two companies since 1980.
Welcome, everybody, to our November, a little bit longer form roundtable, where we discuss a little bit what's happened over the last couple of months and maybe what to look forward to the rest of this year and maybe into 2024. But like what we always do is a little bit of recap, if you haven't been following, because we have, how the markets have done the last couple of months and maybe even year to date too, and probably have Kyle start with that.
Great. Thanks, Adam. Yeah, it's been an interesting year, really, kind of like we've said a number of times over the last 2 or 3 years. It's the tale of two halves, right? So we start the beginning of the year and we have a tear on the S&P 500, really driven by a handful of stocks, 7 of the tech stocks, and the AI talk and push. So the S&P is up roughly about 18% for the year, but only up about almost 2% for the since June, really. So most of those returns came in the beginning part of the year, and those were driven, like I said, mostly by 7 stocks: your NVIDIAs, your Microsofts, your Apples, your Facebooks, Google. So it's kind of very interesting to see that when we look at an index with 500 stocks in it, 7 stocks making up close to 30% of the weighting, and roughly all of the return. So if we back those 7 stocks up, that index was up only 4% for the year at that point. So definitely interesting and concentrated in one area. For the Dow, it's a little bit more what we seem to experience here. It's up about 8% for the year, 7.5 or so, and about 2 for the second half. And bonds have kind of been our broken record story here. We've had a rough couple years, and now it looks like into a third year here for our fixed income position. So mostly in the intermediate space, but for the U.S. ag, which we talk about, is still down slightly. It's essentially flat for the year, but slightly negative. But a lot of that downside's come in the last second part of this year here, with it down about 2%. So, and lastly, kind of commodities. Those were pretty hot last year with the initial start of the Russia-Ukraine situation and inflation and running up of energy prices. But year to date, they're down about 4%. And that's with them turning positive the second half of the year, being about 4% up. So just kind of been a back and forth year with, strong returns out the gate with a concentration in a handful of stocks. One of the facts that we talked about before here in the office is, look at Apple and Microsoft. They represent roughly 15% of the S&P 500. That's 500 of the largest companies, and 2 stocks make up 15%. And that's the largest percentage concentration for 2 companies since 1980. So, but the average stock in the S&P is only up 1% for the year. And so, like I said, we say not all things are equal. But that's just kind of a recap of what we've seen so far from a market and performance year to date.
Yeah, and you guys may have noticed that we have an extra square here on the roundtable. That's by design. So it's the first one where we've had a guest. It should be fun today. But did want to introduce David Lebovitz, JP Morgan Global Market Strategist. Just a quick background so you know who he is. He's a global market strategist on the JP Morgan Asset Management Global Market Insights Strategy team. In this role, David is responsible for delivering timely market and economic insights to clients across the country. Since joining the team, David has helped build the Market Insights program in the United Kingdom and Europe, and has appeared on both Bloomberg TV and CNBC, and is often quoted in the financial press. So a far cry from just us 4. We're happy to have him today, and thought we'd ask him some things that we normally talk about, but these are the type of people that we listen to daily to get our information. We're not just creating this stuff out of thin air. It's guys like David that boots on the ground and really understand it, that help us that stay informed. So thanks for joining us, David. Really appreciate it.
Yeah, thank you for having me. Happy to be here.